What's up, everybody? Earlier today, I did a Blue Chip Monday live stream over in the Discord in Pennybois, and it was also supposed to be uploaded on YouTube, but due to some audio issues, that didn't really pick up. So I thought let's just make a video here for YouTube to go over everything that we have discussed in the free section over in the Pennybois Discord. So this week, first thing on the menu was Apple, and because last week we have seen quite a sell-off for Apple, right? This has been a stock that over in Pennybois advanced. We actually had a nice short signal there at the top. I know for a fact that there's still a couple of people holding puts and shorts on this, so shout out to you if that's you. If not, obviously that's not a problem. We will just play it from here. And I'll give you some levels to look for Apple. So for Apple, we have lost a very important support level at 145.34. That was essentially the 61.8% retracement to the previous low here on the daily time frame from the current high. So we have lost that, and it seems like today we are finding support here at the 786 fib, right? So while that might look bullish, I would urge a lot of caution here in the markets because there's a lot of stuff going on macro wise, and even if we get some support here, ultimately I'm afraid that Apple is in a steep downtrend from mid to August to about now. So we have a trend line right here. Let's make that a red line. It's basically the line that is pushing us down here for Apple. So what I would expect is that these lower levels here for Apple will come into play. So the first level here to the downside, once we lose the previous swing low, is 118.5. And the second level of interest to me personally here for Apple is 106.5. So we will go over the ticker Visa just in a second because we got a play on that on Discord last week, and I'll show you why I think that these levels can come into play for Apple. This is a very strong stock, and it's still holding its previous low, while a lot of other stocks are actually already rolling over to these lower levels and losing their previous swing low. So if that happens for Apple too, I think that these two lower levels here on the chart will come into play. So those are definitely good areas to look for a bounce. Similarly, for some more confirmation for upside, what I would like to see short term to really become bullish is that we simply break this red line that is basically signifying our daily downtrend here from the last month. If we can break that red line and we can find support on 145, then I think Apple will look really good for another leg or another attempt to the upside. But as long as we're basically under 145 and under this red trend line, I would personally urge a lot of caution, and I would say in markets like this, you definitely want to protect your capital and have it allocated at good levels. And even if you think that those levels won't come and you see a bullish day and you see a lot of green, just know that it can all turn very, very quickly in the blink of an eye in this macro environment. And that is obviously not to scare you. That is just to prepare you for lower levels, because currently we're trading at 141. Well, let's say that we do lose the current swing low to that 1272. That would give you just an opportunity to buy at a 16% lower price. So obviously we're preparing for that scenario to happen. If it doesn't happen, well, then probably at some point we will break this red line that basically shows our downtrend, and then we can still act, and then we can still go long once we see the confirmation that we break that important trend line and we retest it as support. So that is my plan for Apple. You can see the levels here on the chart. And with that, I will go over to the second ticker that we have discussed on the Discord stream, which is Visa. Now, Visa is a very, very interesting stock, and I dedicate a lot of time to it because I really, really like this. I think that obviously I'm pretty well invested in Bitcoin, obviously, but I think it makes sense to hedge that at least a little bit with some regular financial service markets also. I think that those are going through tough times, but like everything, but ultimately this is something that is here to stay, and I'm definitely bullish on this in the long term. So what we did do last week is we got an entry at 178. If you're still holding this, great, just keep holding it, I would say. I personally got out last Friday, so we had an initial bounce from our entry at 178. Once again, it's that 1272 fib extension from the low to the high. Your first extension is the 1272. We found support on that. We caught a nice bounce, but last week on Friday it appeared that we were gonna close below the 1272 here, so I personally cut it, but then today it's up again. So that's just something that that happens. Again, if you still hold it, obviously you would want to take profits at these numbers here at 185, 192, 197, because there's a lot of conflicting information here. You could say this is a big falling wedge, and it is, right? You're back in this falling wedge. You're above the white line here, so it's technically a bullish pattern. But then you're also just short term seeing a high and a lower high, so the probability is here that we shoot up, but the probability is definitely also here that we have this little bear market rally again, for the SPY and for some stocks, before we actually have another leg down. Now, where could that other leg down lead us? I think that 168, 169 would be the next level for Visa, where you could find a lot of support. Now, if that breaks, it will be 158. So it's really simple, actually. My support for Visa is 178, 168, and 158. Again, I like the reaction that we're seeing here today. A clear support from this 1272 getting back into this falling wedge. I would say definitely always set stop losses, but definitely in a market like this, if this does go south, you don't necessarily want to hold it to 168 and 158, in my opinion, unless you're really, that is part of your DCAing plan into it. Then that would work. But personally, I'm not really a fan of holding for too long in this market, so I didn't regret just getting out where I got in for Visa, and just relaying this information to you. So I would say, if we do see that Visa breaks above the level of 197.6 again and holds above that for multiple consecutive days, then I would start to become very bullish, and then I would say, yes, you're likely going to break out of this descending wedge, sorry, and the price target of that will be 235. So there's no need to rush into anything. You still get more than enough time for your longs if you're not in it already. If you did catch that 178 and you didn't get out, well, basically we came back to that entry, and it just found a lot of support on that, so it's nice to see. So yeah, the downside levels 168, 158. Once we lose 178 with a couple of daily closes under that, I'm pretty sure that you will dump at least $10 to $20 lower. So I'm just patiently waiting for that to happen. And that's it for Visa. So one of the reasons, again, just to reiterate, one of the reasons why I think that for Apple it's so important to look at the 1272 and the 1618 is because many of these very strong blue chip stocks like Visa, also like Nvidia, although it's not that blue chip, they have already lost their previous swing low, and Apple hasn't done that. So if it does that, definitely we know the levels for Apple already. I'll just quickly revisit that. That would be a 119 and a 106.5. So that's what we have for Apple. That's what we have for Visa. And then the next thing that we looked at here is Google, and we've also went over that last week. This is a pretty ugly chart, because a couple of weeks ago we were setting up extremely bullish here with an ascending triangle. Remember playing that? We had a nice level of resistance right here, a flat level of resistance, an ascending level of support. This looked very good. This was technically setting up for a breakout to 140, but obviously we got the fake out instead of the breakout, losing that ascending level of support, and things went very south clearly after. So again, just the importance of not holding positions. If you got in here, we played the breakout, okay, well, if the price retraces back to where you got in, then for me that's already a sign that I don't really want to be involved in it anymore. I don't necessarily have a problem with being stopped out, because that also prevents you from taking a loss right here on Google, for example. If you would have held anything from up there, well, then you're 20% down, and then obviously you can average down, but I would rather have gotten out like I have. So for Google, I think that we are also retracing to these levels, and just as Visa, extremely interesting. You can see how well these fib levels work. This 1272 here also, we had the close under it Friday, but today we were actually seeing a little bit of a bear market rally, I would say. So we're holding that 1272, but really it's the same story then for Visa. I would say there's no need to rush into anything, because what's likely to happen is that you're gonna long into a lower high here, for example, and then ultimately have another leg down. So I cannot stress enough the importance of preparing for another leg down. I'm not saying that that necessarily must come, and we'll go over that, because just after this I'll go over to Bitcoin to show you why I think that maybe we do find support here. It's just you have no guarantees that this is the bottom. This also doesn't really look like a bottom formation for me quite yet. So the importance of patience is incredible, and the importance of having your capital ready to basically buy the dips at these very important fib levels, this 1272, 6182. So in Discord, we've actually had bits on the 1272 for Visa, but we didn't have any for Google. So for Google, I basically chose to have the buy area 1 here at the 1618, around $91. I think it's a very logical target for another rug pull basically down. If that comes, it's better to be prepared for something and for it not to happen than to not be prepared for something and it to happen. Like, it doesn't hurt to just look at the downside targets. It's definitely not a market where you can just say, okay, buy and it's up only. It's very much the opposite. It's very much preserve your capital on any trade that you see. I would say if you're trading unleveraged and you're trading stocks and you see even just a 3% gain in this market, I would say you gotta take some profit here. And I know that James Legends has been emphasizing that in the Discord. It's a take profit market. I agree with that wholeheartedly, because likely whenever you see some green here, you're in a bear market until you're not. And we have zero confirmation that we're out of a bear market. If we just take a look at the SPY, well, obviously today it's been very strong, but ultimately last week, let's not forget that we actually had a new yearly low close. So absolutely today it looks good, right? We're regaining a very important level for the SPY or the SPX here, which is 362.17, which is the previous yearly low. So we had a lower low, and that drove the price down of some of these blue chip stocks. And then today it looks like we're regaining that support. Now, short term, yeah, it would look bullish, and you definitely have a little bit of a gap here that looks like it might get filled, and that would be a gap up to, or that would be at least 374. So yeah, there's definitely some short-term bullishness that is possible, but the only thing is, if you see gains, you gotta take them. You gotta apply your stop loss, because otherwise, if we do come down here for the SPY, and those levels I've already given you a couple of times, but I do think, once again, that if we start to consistently close below 362.17 on the daily time frame, that we will be in downside targets to 345 and 325 now. Don't necessarily like to bring that message, but you gotta just see these levels as mass opportunity, because ultimately buying lower is really the way to make money, right? That's where the most money is made, is at the bottom of the bear markets. That's really it. So the SPY looking bullish today, but however, I'm not completely convinced. The only thing that we'll still go over, that we've also gone over in the Discord, is Bitcoin, because really I know that a lot of people, they're not completely convinced by crypto. They see it as something volatile and as something very risky. And I think that's just a narrative. And if we just look at the charts, then we see a different story, because I would argue that crypto and Bitcoin, they are holding up extremely well actually in this macro environment, right? While stocks were pushing for new lows last week, Bitcoin held a beautiful, beautiful higher low at around that 18.6K area. We never really lost it. And what we've went over in the Discord a couple hours ago is this pattern here on the daily time frame. So I'll zoom in on that. And basically what we have here is an ascending level of support. So basically you can see that the daily closes, they're creeping up. We have daily closes here, higher daily closes here, higher daily closes here. Now, so we know that the support is basically upwards, and our resistance is pretty flat because we have daily closes here, right here, a daily open and close here, a daily open and close here, same here. So we basically know that the pivot point in the market for Bitcoin is around 19.6K. I would say if you want to be conservative and you want to wait for more confirmation, wait until you close a daily candle or two above 19.6K, because at that point I would expect that this ascending triangle, this is what that is actually confirming a break to the upside, and then we're trading in a technical target from the resistance right here to about 20.7. Now, if we can get above 20.7 again for Bitcoin, that's going to look pretty good already, to potentially say that we may have bottomed actually in June, right? Because this to me is a potential bottoming formation. I'm not saying that you cannot roll here and you won't go way down lower. We're absolutely prepared for lower levels, and for Bitcoin, don't be surprised if you see 16, 14, 12 and 10K again. It's definitely possible, but just short term I would argue that there's no real reason to become overly bearish, and definitely not on the crypto markets, because those again are holding higher yearly lows while the stocks are doing the opposite and they're pushing down. So I think it's definitely very early to talk about decoupling, but we do at least see signs that crypto is holding up strong. So that's what I would give you. Look for daily close above 19.6. Play it to at least 20.7, take profit there for sure, and if we get above 20.7, then we will actually likely take out 22.7 and potentially even just follow up and go to new highs here and break the previous high that we've had on Bitcoin. Now, that's still a long way off, but I definitely think that this could be some kind of Elliott wave formation here, where we will see 5 waves up in the market, and I have gone over that with Jackal and Pennybois, but I'll just show that really quickly to round up here. I think this could be a potential A wave up or a wave 1, so an impulsive wave 1, and then you have this A, B, C correction. Wave 2 is a corrective wave, and then usually what you'll see is if we are bullish and if this is a double bottom, then we are looking at an impulsive wave 3, and the thing about that wave 3 is that it will take out the wave 1 high, right? There's no guarantee that we will take out the wave 1 high, but I do think that if we are in a macro 5 wave moves up, that we will take out this wave 1 high, and then we will have a wave 4 correction that can come all the way back down to the wave 1 high, which is around 25.2K, before ultimately potentially having a 5th wave up, before having a deeper correction, right? That's still a long way off, but I do suspect that this wave right here that we've went through could be an A, B, C correction down, holding a higher low, holding a strong double bottom, before ultimately going higher while many people are getting bearish. Now, same thing with this. If you want to play this, you have to apply stop losses. If you go long here in the coming days, if you see that close above 19.6, or maybe you are long already because you're convinced that this is a strong bullish pattern, which is my case, well, you have to apply stop losses. If you come down to, I would say, again, below 18.8, then at that point you have to be out. So that's just the importance. Always apply stop losses. It should be obvious. And definitely take profits in these markets, right? If you're long on Bitcoin here, don't necessarily immediately expect a massive wave 3. You gotta pay yourself at these levels at 20.7K, and that's it. So the importance of taking profit is more important now than ever. Clear example of that was also Visa last week. You immediately see from entry we get a 3 to 4% move to the upside. Actually, it makes a lot of sense to take these gains off the table. So don't ever be scared to take profits when you see them. And that's what I have for you on, well, on the SPY, on Apple, on Google, on Visa, on Bitcoin. Maybe the last thing that I will show you here to round it up is a new ticker that I've been looking at, which is Kellogg's, right? I think this is also a strong company that probably won't go anywhere, but I do see a very interesting pattern here, which is a potential, well, it very much looks like a head and shoulders to me for now. So Kellogg's on the daily time frame, we had this left shoulder, we have this head, and it appears that we have created a right shoulder, which is pretty symmetrical to the left shoulder, and now we're actually back at this neckline of this head and shoulder. So for me, this is a bearish pattern. This is a topping out pattern. I would say very likely once you see again that we consistently close days for Kellogg's under 70.31, I would say you're trading to a downside target off of this head and shoulders to about right here to about 64.5. Again, if you know how to short, if you can do options or you just have access to shorts, these bear markets are great opportunities because, yeah, you see a bearish pattern arise, you play the short side. If you only go long, well, then your option is simply to wait until these lower levels appear. If they don't, we will get the confirmation that it won't happen. So for Kellogg's right here, the thing is you're in the head and shoulders, and it's always important to have your invalidation. So the invalidation of this head and shoulders pattern to me would be breaking above this particular red line here, because we have a high, a low, a lower high. So we have this lower high trend line. I think that we are looking very bearish unless we can get back above the red line and fall back to it as support, and then that would be a great long entry. So the thing is, there will always be a lot of opportunities. It's just about having your scenarios ready. So we have our downside target here, and we also have our invalidation point, which is simply breaking the red line on the daily time frame. That to me would devalue or this head and shoulders pattern. So that's what I have for these blue chip stocks. That's what we have talked about over in the Discord, and that's what you can expect to be updated on my channel in Pennybois. So I hope to see you all there. It's a great time there. We're surviving the bear market, and even more than that, we're not even just surviving it, we're thriving in the bear market. We're learning vital skills, we're being patient, we're applying our capital at the right levels. So definitely, if you want to be a part of that, you need to come check it out, and I'll see you over there, and thank you for watching this.